which is much reasonable to purchase.
I'm getting some more. Well,
I'm playing on and especially if
you want to put that especially. I mean, I was gonna tell you.
No, I'm just.
This is what I'm saying. Especially, Tesla is going higher and higher. You know, so hey, your girl is getting rich. And then finally, from the South African boy, now American Canadian.
Yo, it's your boy, LJ Chaplin, with Lady Siza, bringing to you Chilling With The Chaplins, where we deep dive, giving you practical concepts in ministry, business, relationship, and personal development. So, we can take control of our life. Let's go, and let's get it started. Welcome to Chilling With The Chaplins. I'm LJ with the one and only, my lovely wife, Lady Siza. She is in the building. Yes. You know we're about that ride each and every week. You know what I'm saying? You got me? You know, so this week we just want to talk about business.
Yes, moolah.
Investing, stocks, you know, because something happened and is happening in 2022.
And we don't want you to be left out.
Yes.
Come on now, we love you that much.
We love you that much. And so we just want to touch on it and speak on it this week so that you're able to keep an eye on these companies because there's some major companies that's getting ready to split their stock. And three in particular that we want to talk about is Google, Tesla, and Amazon. And so
those are the big boys.
The big boys. And so what did that mean for a company that split their stock is, you know, it gives a beginner investor or someone that want to buy shares that don't have $1,000 or $3,000 to buy shares. And so my wife is just going to give you a brief introduction to what it means for a company to split their stocks and why a company split their stocks. And so so let's just touch on this and let's talk about business and investing.
Yeah, so before we get started, before I explain what it is, I just want to know, I mean, some of you guys don't even know what stock is. I mean, I had no clue what it was before I even started being an investor. So maybe LJ, would you want to tell us just a little bit what a stock is and why should I have a stock? Is it really that important?
Well, basically what a stock is a share or a piece of a company or corporation, where a company sells a piece of their company to shareholders or employees. Yeah, so that's basically what a stock is.
Okay, so we got that part right. So, well, let's be shareholders. If you're not a shareholder, we do encourage you to invest in stocks. It's actually a very good, lucrative way to invest nowadays. You can do long term, you can do short term, you can be a day trader, stalker. You can
trading.
You can do so much.
So much.
For myself, and I believe LJ as well, we are long term investors. Stockers. So we just buy as and when we see a good stock out there in the market. And we're excited, and some of the stocks that we've bought are splitting and have split.
Yes.
So let's share this information with you guys.
Because we want you to, those that haven't taken advantage of it, we want you to begin to do your homework, look at it, because we always tell you, just don't buy a stock without doing your homework. You always want to do your homework. You want to make sure is this stock or this company, it's still a good company, if it's still worth buying. And we do believe a few of these companies that plan on splitting their stock and has already been approved to split their stocks is still good companies and still going to be doing big days 10 years, 15 years, you know, especially like Amazon.
Yeah, they're not going anywhere. So let's get into it. What is a stock split? I think LJ has already kind of touched on that. And why do companies split their stock. Let's start here. What is a stock split?
Yes.
It's when a company that is concerned, for example, the ones that we're going to speak about is Google, Amazon, and Tesla, but any company for that matter, when their share price is either too high or too low.
Too low.
That's, and then, so it either opts to actually split a stock or do something called reverse stock splits. Today, we're not going to touch on the reverse stock splits. We're simply going to speak about stock splits. All right. But then what is the tool? So that you kind of have an idea. I'll just touch on that a little bit. So a stock split can help a company lower its share price to appeal to investors. And these investors could be the employers, because some companies offer their employees shares when they've stayed with the company for a certain amount of time, or when you first join the company, just so that they retain you, and they say you will get these shares once you've
reached a certain years.
Work for a certain amount of time.
And I had the benefit of receiving shares of a company because I used to work for Amazon.
Yeah.
And so that's why the shares that I do have is about to split and give me more shares because I work for Amazon.
And we're excited about that, right?
And so
Okay,
and the great thing that make me more excited because I'm about to sell Amazon stocks. And my wife said, no, just keep it, just hold on to it. And so now I am glad that I didn't sell the Amazon share because it's about to allow me to have more shares than what I have now.
Yeah, all right. So we got that part. Well, good for you.
Listen to your wife. Listen to your wife.
Now, let's go back to the splitting of the stock. So we said that that's when the company actually wants to allow its investors or potential investors the affordability of purchasing a stock. So say, for example, right now, these companies that are about to split, their stock shares is over $1,000.
Over $1,000.
Right? And $1,000 may be too much for many people, and maybe they want to reach out and buy as well. So the company allows more people when they split a stock, so they make a stock cheaper. And allows it for other people to be able to afford purchasing a stock. So say, for example, Amazon stock is $1,000 right now.
It's over $3,000.
It's over $3,000. So if they do what is called a split stock, so they are doing 20 to 1, which means if you own one stock, Amazon stock,
yes,
your stock will be split 20
times
or 20 ways, which means your one stock will create 20 more shares. That is insane and
actually
incredible.
19 more shares.
19 more shares.
Because you have a total.
I have a total of 20. Right. Okay. Now a reverse stock for works the opposite way, where it helps preserve the listing of a major stock company, and it helps to boost that company in the stock market. But like I said, we won't talk about the reverse. We'll more focus on a stock split, because it is what's happening, what's brewing right now, what's being spoken about in the streets of
Wall Street.
Of stocks. Now, I want to know, LJ, is it a good thing to have the stock split? What is your take?
Well, I think it depends, because sometimes it can be smoke and mirrors between companies.
What is smoke and mirrors? Now you're talking gibberish.
Well, smoke and mirrors. Well, a company sometimes could
bluffing.
Bluffing, yes. A company sometimes they split a stock just to get some attention or get some eyes on it, to try to bait you into buy their shares, but that don't mean it's a good company. So that's why you always got to do your research. You got to follow the trend and follow the numbers, and always do your homework, do due diligence to see if this company is still a good company and it's still worth you buying for the future and long term.
So my other question is: it worth having a split stock? So what's the point of companies going through a split stock?
Well, especially if it's a good company, if like I said, they want more eyes on their stocks, or they want more people. They want to give more people opportunity to buy their shares. And a lot of times companies also split their stock is because maybe they're trying to move their position into a sector in the stock market. Maybe they want to go into the Dow Jones or the NASDAQ, and so they're trying to change their position in one of these spaces. And you got to realize something too. and that's why they gotta pay attention to the stock market, because if one company go into the Dow, that means another company had to come out. So you gotta,
because there's a certain limit.
Yeah, there's a certain limit. So
Now,
that's why a lot of companies are like, if Amazon doing the spot state, we gotta watch out now, because if they go into this sector, then that means they're gonna push another company out.
Now, do people lose money if there's a stock split? Because I understand, okay, one stock for example with Amazon, it's worth over $3,000 each, which is incredible.
Yeah, incredible.
And so if they split it 20 times, the stock could be will be worth much less, right? So
not really, because you still got 20 shares, so it kind of balances out.
How?
If you have one share 3,000, but you got 20 shares, that's still around about $3,000. If you sell,
so still your 20 shares will equate to
3,000.
So what's the point? So what am I benefiting from as a split stock then?
Well, because an individual that got one shares, you got 20 shares now. So if that's a good company, your 20 shares as they grow, yes, and
so it's good in the long run.
It's good in the long run, not short term, but if those that got a stock split and got 20 shares. It's good in the long run if the company still grows and get back to that $3,000 range.
Yeah, and these big boys are definitely going to grow. I mean, I don't see them going anywhere.
And it's good for...
We're Googling everything for crying out loud.
And it's good for the newer investor or someone that wanted to get in.
Right.
But missed the wave and they couldn't, and now it was too high, and so they didn't get in. So it's good for those individuals that was on the fence and waiting for the stock to come down and never went in. And so now give them an opportunity to get in. While it's because Amazon stocks and Google gonna go to $132, which is much reasonable to purchase.
I'm getting some more.
I'm definitely planning on getting more shares of Amazon and Google as well. But it gives you opportunity.
Because those are guaranteed they're gonna go out.
Yeah,
I mean,
believe
everybody Googles everything.
Because you gotta remember, Google owns Google and YouTube, and we see YouTube is not going anywhere right now. Yeah, it's booming on YouTube. This podcast goes on YouTube, right. So a lot of people is on YouTube right now, and a lot of people use Google. So we believe Google still is a good company, as well as Amazon still a good company, especially with the ANS. Their services, so we believe that Amazon is also a good company. So we believe these two main companies is going to be here for a long time.
Now the question, is it better to buy a stock before it splits or after it splits? Like, talk to us, teach us why, which one is better?
Now, I can't really teach you about stocks because I don't really invest in stocks. I can just give you from experience and what I seen, what I heard on other investors done. So, because I'm not an investor. I got to put this disclaimer out there. I'm not an investor, but I do invest in.
And I think another disclaimer is we are no financial.
We're not financial advisors. Yes, we're not.
What we speak is just from
our experience and what we know and what
we've researched.
And so, but now what was your question again?
Is it good to buy a stock before it splits or after it splits?
It depends. Now I feel like if you on the fence, I think if you know the stock is about to split, it might be better if you wait until the stock split.
Because before it splits, it's expensive, right? So rather wait for it.
Wait until after. And so I know Amazon, the plan that it should go into effect between May 31st and June 3rd. But this it's gonna sell at its new price on around June 6th. So at June 6th, you're gonna see the new price, and so this is around the time that you want to begin to start buying Amazon stocks if you feel like this is a good company and you feel like you want to invest in that stock.
Because the next question is, do stocks go up after the split?
It's possible. It all depends on how many people buying the shares. It all depends how many people buy on that day.
I could add to that, actually, to that response as well, because when there's a split stock, there's a lot of excitement.
There's a lot of excitement, yes,
around those companies.
Yes.
So people will come in and buy in numbers. And when they buy in numbers, it means the stock price goes up.
Yes.
It's in demand. It's demand versus.
Yes, and especially if
you also put that especially. I mean, I was gonna tell you.
No, I'm just.
They just want to say especially. Okay. Especially, tell us that.
Yes, especially if the hedge funds managers get in, because they don't want with the money. They don't want that can move a stock, and that's why most companies do a stock split, because they want the hedge fund managers to invest their money that people give to them to invest their money with, these hedge funds companies. So they move the stock, they move it, and a lot of people are excited. So a lot of people don't want to jump into this Amazon and Google. And Google is around July. It's around late June, early July. So you want to watch out. Like I said, you definitely want to begin to do your homework again. And make sure the numbers is right. Make sure you feel like this is a good company to invest in, and then definitely buy 1 share, 2 shares. But if you could buy 10 shares, great. But like I said, if you get in.
So when you buy these shares, are you expecting? I know I mentioned this in the beginning, but I just want you to reiterate it. Are you expecting a return immediately, or the return will come? You are not looking at a short-term investment. It will come like years after.
Yes, like an Amazon and Google share. Like if you're buying shares into stock, you want to sit on it and just hold it for a good while. You don't want to. That's why you got to follow the numbers and make sure the company is always good, because Amazon and Google stock, you just want to sit on it. You want to buy a couple shares and sit on it. For those individuals maybe that don't have maybe you living from paycheck to paycheck, or you not making as much. I would advise anyone to at least buy 1 share and
have something.
Yeah, but
like I wanted so badly to have a Tesla share. And I got 1, right?
Yeah.
This was really expensive when I bought it.
Yeah.
But now it's going for a stock split.
Yeah.
Which means I could potentially have 10 more stocks.
10 more shares.
Because I
10
think
more shares.
10 more shares, because they want to go 10 to 1, which is awesome.
Yeah.
Because we know that Tesla is going higher and higher. So hey, your girl is getting rich.
But I would advise people at least buy 1 share for those that maybe living paycheck to paycheck, or you don't have as much, because a lot of our audience maybe don't have a lot.
Who told you? We loaded. What you talking about? Let's move on.
But we still building. But I would say buy at least 1 share, and then every week, your coffee money or your lunch money, put $20 into that share. And we're gonna put the link in the description of a company that you could start investing in, where you can invest with just $20 or $10. So
because the important thing is, don't go for those companies out there that are out to scam you. Because there's a lot of scammers out there saying, oh, we can help you invest in stock. No, go for a company that is credible, and we use Robinhood, right?
And so, the description, the link will be in the description, so that if you want to start investing, you can definitely start investing. Because I would advise you, especially if you're thinking about when this happened, if you want to invest in Amazon or Google, like I said, even if you just buy 1 share, and every week you just put $20 into it.
So right now you're telling us we're looking out for Google, which is also called Alphabet. Alphabet, actually.
Yes, Alphabet. That's the new stock symbol. Yes. Parent
company for Google. So Alphabet, and then Tesla, and then Amazon. Those are the 3 companies we're looking out for. I know that Johnson & Johnson also just had a split stock not so long ago.
And Chipotle.
Oh yeah, Chipotle is also in the pipeline as well.
Yes.
But before we go there, I just want to know, what are the disadvantages of a split stock?
What is the disadvantages?
I know one is that
it decreases.
Are you going to give me an opportunity? It doesn't change the fundamentals.
Yeah, it don't change the fundamentals. Yeah,
right?
Yeah.
So what does that mean? It means that if you have 1 stock and it's equal to $3,000 US, what's gonna happen is after it splits, you will still have shares equating to $3,000
Exactly.
until the stock price starts going up. Then you're gonna be able to make more through
More,
the
more
stocks.
money, yes, because now you got more shares.
Yeah.
So if it go back up to 3,000, if you don't sell it, then you got 3,000 per share.
Yeah. Another disadvantage you can think of?
The only disadvantage is if the stock split and that stock split and it goes down and it's a bad company and it don't go up
And it doesn't go up.
and it don't go up. That's now you lose a lot of that. So like I said, yeah.
And I can think of another disadvantage as well, is attracting the wrong investor. Because now any Tom, Dick, and Harry can buy these stocks, and maybe their intentions might not be great intentions, right? Like you said, there's hedge companies that are ready to just buy them in bulk. So what if the investors that are buying are not meaning good for the company? You know what I mean? So yeah, there's a few disadvantages, but I don't think they're that bad. I mean, who would want to invest and not?
But they do have a certain amount of number of shares that sell out. So that's why if it's get to a certain amount of investors, you want to get in as quick as possible because don't allow maybe 49% of the shares or 50% of the shares because they don't sell all their shares, to investors. So yeah, it's a limit.
So anything else you'd like to share with us? Why you wanted to speak about the stock splits? Like, what are you telling our audience? What are you saying to them? What are the advantages of a stock split?
So like we discussed, what are the advantages of the stock split? It's giving an individual who don't have it. You might not have 3,000 or $1,000. It gives you an opportunity to get in the game.
Right.
And that's what it's about.
And it's also, I think, for companies to improve their liquidity. They just want to make their stocks more affordable for more people to come in and claim that they're shareholders. Yeah, and also they're making themselves, it helps because it puts the word out there. Everybody's talking Amazon right now. Everybody's talking Google.
Yeah.
Like you're trending.
You're trending.
And when you trend, it means more people are looking into you.
Yes.
And that's good for you as a company.
Yes.
Yeah. What else would you like to?
And it's giving a boost to the market. It's giving a boost to especially when the Amazon, Google, they splitting their stocks, so that's and Amazon didn't really, like Jeff Bezos didn't really want to split the stock.
He didn't?
No.
Why?
He didn't want to.
He's enjoying that his prices are so high.
Yeah.
Because I think that looks like a win for him, right?
For him, yeah.
That his company is growing to such an extent.
And I guess he feel like, what, if you ain't get in, you ain't get in. That's your loss, I guess.
You're the weakest link, dude.
No, don't say that. He's not the weakest link. This guy's a billionaire.
Listen, no, but he doesn't want us little small fishes to come in and get some stuff.
This guy's a billionaire.
Oh, but guess what? He doesn't make the final set because we got shareholders and they agreed to have a stock split. So we are on the lookout and we're excited.
Yes, we're excited.
Yeah.
And so, definitely, we want to let you know that, start preparing. And that's why this podcast is here to help individuals, like ourselves, to be able to be in the know.
Yeah.
Be in the know to learn some things so that we can begin to prepare ourselves for a better future.
Yeah.
To prepare ourselves to have success and to attain wealth, because the sky's the limit, and doors is being opened up, and so opportunities is out there for anyone.
So grab them now.
They're ready to grab it. The opportunity is out there and it's endless.
Yeah.
The opportunity is endless. I don't care where you are in the world. The opportunities, I'm not gonna say endless, because there's a lot of third world countries, that can't trade.
Why not?
Because of government.
Really?
Yeah, that's what I heard. This one, government. So some countries have but the opportunity is there, and so we definitely want to tell you to educate yourself. Educate yourself. Start preparing yourself, because remember we said next opportunity window.
Yes.
This is the year of next opportunity window. and for you to take advantage of these next opportunity windows, you have to be ready for them.
Yeah.
Because guess what? I love this because John Wooden said, if you waiting for an opportunity without preparing, then you're gonna miss it. You're gonna miss it. So, and I was paraphrasing there, but so you gotta be ready for it. You can't be getting ready when opportunity happens.
Yeah, you gotta be prepared.
you gotta already be prepared.
Means
Preparations, yes.
That's what happens.
Yes.
Now, I just want to touch on the 9 companies that will be doing a split stock
that you should watch out
within
for
2022. And these, I also want to just share their recent current price, stock price, which is insane. We have one is called Berkshire Hathaway. I need to find that company. I don't know who it is or who she is.
I think that's a bank.
Oh my God, their current stock price is over 500,000 US dollars.
Mm-hmm.
That's $500,000 for one stock.
Yeah.
What? Right now their market value in billions is 763 billion. That is insane. So you want to look out for that one because they're thinking of splitting their stock. These are all companies that have a share price greater than $1,000, all right? And they are planning on splitting. NVR, their current share price is over 4,000 US dollars, and their market value in billions is $15 billion. That is really good. Amazon, which we have one, we're about to have 20. Guess what? He had 3. We were gonna have like how many? 30. No, we were gonna have 60. And he sold the 2. But anyways, we got this one that we're hanging into. And Amazon is actually $3,200 their price, and their market value in billions is 1,600 billion, which is still a good amount. And then we have Alphabet, which we said is Google and YouTube, etc. They are currently over 2,800 US dollars, and their market value is 1,800, which is really, really good. All these over 1,000 is really wonderful. But I'm talking billions, okay? Now, another one is Booking Holdings. They are over 2,200 recent price, and their market value in billions is 94 billion. And then AutoZone. I didn't know AutoZone was in the game as well.
That caught me by surprise. I didn't know AutoZone was that high.
That's incredible.
Yeah, that's incredible. I need to look into that.
AutoZone is just a little bit over $2,000 in recent price, and their market value in billions is 41 billion.
Yeah.
You know what? AutoZone is international. We have AutoZone in South Africa as well.
Oh.
Yeah, it's an international company. And then Chipotle, which I had for dinner today. Chipotle is over 1,600 in share. I didn't know that Chipotle is actually with the big boys.
Yeah, Chipotle.
Because it's also international. It's a Mexican company which is big in the US as well. And Chipotle is at 45 billion in market value, which is incredible. And then we have Metla Toledo International, MTD. I don't know what that is, but it's over 1,300, and their market value is over $31 billion. And then finally, from the South African boy, now American Canadian.
Okay. Tesla.
Yeah.
Tesla.
That's my boy. That's my homeboy, right?
Tesla.
It's Tesla. Yes, it's owned by a South African. All right, but he claims he's American and a Canadian now, whatever. But he's born in South Africa. And what's his name again? Forget his name.
Elon Musk.
Elon, yeah. How can I forget my homeboy? All right, so for Tesla, it's actually over 1,000 US dollars, the recent price. And then, so I own a share with Tesla. Oh, so I own $1,000. What? And then their market value is just over 1,000 as well, 1,100 in billion dollars, which is incredible. Right, guys, so I hope that helped with all that information that we've given you. The whole point of this session or this video was just to put it out there
Put it out
that
there.
guys, open your eyes, open your ears.
Open your eyes, yes.
There is money to be made out there.
Yes.
Let's get into stocks, let's get into trading, let's make this money.
Let's make this
but
money.
the right way. Go to legitimate companies that can help you invest your money and grow it.
And get educated, get educated. If you want to invest in stocks, begin to educate yourself, pay for a course, or a coach that can teach you how to invest. Whatever, if you want to invest in stock or you want to trade.
A credible person. Don't just go for anybody that's inboxing you and telling you they're going to help you. No, be very careful.
Be very careful.
Yes. Now we've come to the end.
Do your research. Like I said, make sure that, the person is credible. Make sure they have good reviews and,
Listen, LJ, people can lie about their reviews. So we just want you to go to a legitimate and credible companies, especially those third-party companies that help you get a portfolio.
But definitely just educate yourself and prepare yourself, because there's a lot of room for growth. And so we thank you for tuning in to this podcast episode. And like we always say, subscribe to the channel.
But before you subscribe, guys, we will be having a mastermind starting.
It started tomorrow.
Oh, it starts tomorrow.
So
if you haven't registered,
register tonight.
Register tonight. Get in the mastermind. It's free, virtual mastermind. Only an hour of your time every Saturday for the next 6 weeks. You will love it. Trust me. So get yourself registered. You'll find the link in our description box.
Yes.
And then also, if you want to follow us personally, come on now, follow your girl at Lady Siza 1 on Instagram and LJ.
At Get Inspired by LJ on Instagram and Get Inspired by LJ on YouTube. Subscribe, hit the notification bell, as well as you can follow us on all platforms, Chilling With The Chaplins.
Yeah, well, yes.
Yes, and you could follow us on our audio platform, Google Podcasts, Amazon Music, Spotify, and Apple Podcasts. We always say follow us, give us a rating, as well as leave us a review. And we just thank you for watching. We
get those comments in, guys.
Yes,
those comments in, and also tell us what you would like to hear from us to discuss in the near future. We are open to almost all topics.
All topics.
Almost,
yes.
I said.
Almost.
Underline. And then, we're going to be bringing you more content. But we also want to hear what you would like to hear from us as well. So we'll look into that and discuss it with you.
As we grow and as we learn, we definitely gonna bring it to the platform.
Yes. All right then, guys. You have yourself a great week.
Yes, thank you.
God bless you and Nisalia.
Take care. See you next week.
Bye-bye.
Bye-bye. Yo, it's your boy, LJ Chaplin, with Lady Siza, bringing to you Chilling With The Chaplins, where we deep dive, giving you practical concepts in ministry, business, relationship, and personal development, so we can take control of our life. Let's go and let's get it started.